Hello and welcome to Trading with Rob. This is the daily markup for the DAX cash index for Friday the 12th of September 2025. So overall, I saw the day as starting up with a gap of around 50 points, quite a large gap, a double top followed by a wedge bottom, an expanding triangle / trading range, and then a weak bull trend going into the close. On the chart, I usually mark yesterday's high, yesterday's close, and yesterday's open, as well as the open of the day and the close of the day. We have the 60-minute EMA as the dashed blue line and the 5-minute EMA as the blue solid line. So starting the day, we had a large bull bar on the open. Typically, I would say that this is accepting the gap up, but we are testing resistance above in the form of yesterday's high. It is strong enough to expect a second leg up, but because the follow through is poor, the upside might be limited. However, the large bull bar makes a strong bear trend day less likely, so we're more likely to have a bull trend or a trading range for the day. Then we had the second leg up, which achieved its minimum of going above the close of the opening bar, and again testing the high from yesterday before being rejected by consecutive large bear bars breaking below the open of the day. These are big enough to expect and strong enough to expect a second leg down with obvious targets below, such as yesterday's close and potentially a measured move down. So I might expect a vacuum down, and it's a potential double bottom with the opening bar. We did have a little bit of a bounce, but then the market did break below the potential double bottom and then moved into a wedge bottom with consecutive climaxes and unsustainable selling down to a low. There was then consecutive strong bull bars, but after such a strong and tight bear channel, it's unlikely that the first pullback is going to be successful, or so the most the bulls can really expect at this stage is transitioning into a trading range, which of course we got. Consecutive double tops, double bottoms, and a wedge, even though the second push up didn't quite reach the heights of the first push up. There are still 3 pushes, 1, 2, 3, which functions effectively like a normal wedge. We also have, as the trading range developed, an expanding triangle, a series of higher highs, lower lows. So as usual with trading ranges, there's elements of both a bull trend and a bear trend visible early on. We then had consecutive bull bars breaking above the trading range and the 5-minute EMA, suggesting that we may be going into a bull trend. And if we extend the line from the upper line from the expanding triangle across, we can then develop a bull trend channel, which contains all of the or most of the trading range action for the most of the rest of the day by duplicating the upper line and dragging it to the bottom. We then had a test at the top of the channel and a pullback to the bottom, which resulted as a test of the breakout point from the early consecutive bull bars. This bull trend is pretty weak and there's lots of overlapping bars with poor follow through, so it makes it quite difficult to trade, in my opinion, with stop orders. And then late in the trend we had a series of bull bars, the strongest looking bull bars for quite a while in as a series of bull bars, and they broke out above the bull channel. And normally bull channels don't get stronger, they normally have bear breakouts. So 75% of with trend breakouts of channels will fail, and then the minimum that we're expecting is a test of the opposite side of the channel, which eventually we did have, but it's a weak pullback, more of a never-ending pullback towards the support of yesterday's close and the 60-minute EMA. Overall, the day was pretty challenging to trade after the first couple of hours, I thought. We had a strong double top early in the day, and the first reasonable trade would have been, in my opinion, below this large bear bar, but it is getting low in a potential trading range with the opening bull bar, so it might be better to wait for follow through or even second entry, which is here, or one of the consecutive bear bars that followed. Then going into the trading range, don't want to take any of the any late bear sells, shorts below any of the bear bars. They're far from the moving average, and it's late in the move down after repeated climaxes. So, but at the same time, don't want to take the initial long positions that might arise after such a sharp, tight channel down. Better to wait for a second entry above a strong bull bar as a part of a double bottom kind of formation. Potentially looking for just a scalp at this stage, particularly if we're still in a trading range. But this is a three bar bull micro channel, which is typically quite high probability for having a measured move up. We then have a double top wedge bear short below the strong bear bar at the upper end of the trading range, and another potential long in the lower range of lower third of the trading range, followed by a better entry above a better looking bull bar. And then after the breakout, after a couple of legs, it might be a reasonable short below this strong looking bear bar, but obviously that failed, and then I think it's pretty difficult to enter on any of these bars here. They don't have a strong looking setup until there's a double bottom testing the breakout point, but even then there's a bit of a tail above this bar, so maybe looking for a second entry is reasonable. And then after the consecutive strong bull bars breaking out of the bull channel, I think we want to be looking for a failure of this and a move towards the bottom of the channel, which would obviously be a counter trend trade looking at more of a scalp. So overall, this is my markup for the day, and I'd like to thank you for watching.